We've looked at the classified balance sheet, so now let's dig deeper into the income statement by reviewing the multi-step income statement. Companies generally use one of two forms for their income statement, a single step or a multi-step statement. A single step income statement calculates total revenues and total expenses and then determines net income in just one step by subtracting total expenses from total revenues. So a multi-step income statement then calculates income by grouping certain revenues and expenses together and calculating several subtotals of income. So while most companies prepare multi-step statements, there is some variation in how they are prepared. However, most include these four key subtotals of income, such as gross profit, operating profit, income before taxes, and net income. So the result is that these subtotals provide information on the profitability of various aspects of the company's operations. So here you can see those four different subtotals. Let's go ahead and move on to horizontal analysis. Now that we've looked at the classified balance sheet and the multi-step income statement, we're ready to start analyzing those numbers that are presented on the two statements. So analyzing financial statements over time is called horizontal analysis. The idea behind horizontal analysis is to analyze changes in accounts occurring between the years that we're studying. So to facilitate this analysis, all the dollar and percentage changes are calculated on each item within the financial statements. So here's an example. Remember, we mentioned Bed Bath & Beyond as a publicly traded corporation, so we're going to use them in our example. Horizontal analysis is a method of analyzing a company's account balances over time, recall. And so it's normally conducted on both the balance sheet and the income statement. So that's why we have snippets of both statements for Bed Bath & Beyond. The analysis calculates both the dollar and the percentage change in each account on a financial statement. So here you see the formulas, not really complicated formulas, for the dollar change and the percentage change in the account balance. And so now, using Bed Bath & Beyond's numbers, we apply those formulas, and now we have the changes for these two accounts that we're looking at, inventory and net earnings. Another analysis that we can do is vertical analysis. So horizontal reviews changes through time. Vertical analysis compares financial statements of different companies and financial statements of the same company across time after controlling for differences in size. So when comparing companies of different sizes, it's useful to standardize their statements this way. So in vertical analysis, it's a method of comparing a company's account balances within 1 year. So it's also normally conducted on both the balance sheet and the income statement. The analysis is calculated by dividing each account balance by a base account, and that yields a percentage. The base account for the balance sheet is total assets, and the base account for the income statement is net sales or revenues. Now, the product of a vertical analysis, the result, is sometimes called a common size financial statement. A common size financial statement is a statement in which all accounts have been standardized by the overall size of the company. So common size statements are very useful because they allow investors and creditors to determine the importance of each account to the overall company and to compare that importance to other companies, even though their sizes vary greatly. So let's take a look at an example of vertical analysis, again for Bed Bath & Beyond. So now we're still looking at merchandise inventory and net earnings, but because we need those base accounts, now we have information on total assets and net sales. So in the vertical analysis of the balance sheet, each year's inventory balance is divided by total assets for that year. And then in the income statement, each year's net earnings is divided by net sales. So you see the balance sheet calculations first, and then the income statement calculation. So we see that inventory as a percentage of total assets has grown a little bit for Bed Bath & Beyond, and so has net earnings as a percentage of net sales.